What's up, you beautiful apes? Welcome back to the channel. Great to have you back here again. We're gonna wrap this up into 3 different segments into one video. Try and make this as useful as we possibly can. We're gonna start off the video by talking about the overall market. What do we see today, right? I've been covering the NASDAQ, and trying to give you a day-by-day kind of update and a couple different scenarios of what we could possibly see, right? We're gonna talk about that. We're gonna talk about AMC as well. And then obviously I need to address RKT and what the heck happened there. So we're gonna try and pack as much information here as we can. What is up, everybody? Welcome to Today's Trades. We give technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. Here we go. We're gonna start off here with the NASDAQ. This is what I have pulled up here right now. Sorry, I just bought my camera. Anywho, we've got the NASDAQ pulled up, and these are daily candles, which means that each one of these candles represents an entire day of price action. And we had a couple different things pop up here. This is gonna be my 3rd video talking about this market correction that we've been seeing right now. And what I have drawn up here are levels of support, which we would anticipate testing with a 38% retracement and a 50% retracement from the bottom of this run-up. Now, why would I pick that number? Why would I pick 50%? Well, that is because in previous retracements, right, corrections in the market, this is about the number that we've seen come up in the past. So we're actually going to lower this just a hair so we can get that absolute bottom candle. And you can see here that we've got these lined up pretty dang well. So I actually did move up that 50% just a hair because that is where we have some levels of support appearing. But you could take either one of these numbers, right? It's a difference of about 100 points on the NASDAQ. So we were down quite a bit today. It was a large red day for the NASDAQ. We ended up down about almost 3%. A lot of stocks got slammed during the regular market hours. I mean, if we look at a good example would be Microvision, which is my #1 stock that I absolutely love. I've got nothing but good things to say about this stock at all times. This is what I believe is going to be my absolute killer in my portfolio after the next 1, 2, 3, 4 years. This took a beat down today. So if we look at this on the 1-minute chart, right? Look at this on a daily chart. We opened the day pretty good. It wasn't one of those days where we had an initial sell-off. In fact, we started the pre-market very, very bullish and then ended up bleeding for the entire day, right? And this was not just MBIS. We saw this with a lot of stocks. Sensonics is another example of this, right? We started the day actually up in the pre-market, right? We had a small gap up right at 4 a.m., reached all the way up to $3.52, and then bled the rest of the day. Another one of my favorite stocks, AGTC, right? Started the day out pretty well, bled the entire freaking day. Almost no volume coming out of this as well. So you guys get the point here, right? The market was getting smoked. And it was very unusual compared to that last huge red candle that we saw. So if we just come back out here and take another peek at this, you can see that this previous candle, we actually, this huge bleed session, we gapped down on the pre-market. So if we just take a look here, you can see that, this top of this candle down, we gapped down, right? I remember that day, it was 4 a.m. and everything took a slam. Like I was watching Whammy that day, and Whammy dropped like 15% just like that off of no volume. So it's a much different scenario here. It was a slow bleed throughout the entire day. You can see the top of this little wick right here. It's similar to this candle, right, where I have my mouse over, where we started the day pretty decent. It just kept bleeding. I mean, there's almost a non-existent wick on the bottom here. So no price rejection at all. That's just a straight up break of this ascending level of support. And that was a bearish day, right? So I said that we have 2 different situations here, 2 different scenarios. Either A, we respect and continue to ride this ascending level of support, right? You can see this green candle right here. We had another red candle come and test it. It closed beneath, but I want to see a candle open and close below that to say that we've officially broken that trend, and now we have, right? So this is a continuation. This is the second possibility, which I talked about, which is a continuation of this correction. And now we're going to be watching for if we just delete this this quick as I was Fibonacci retracement, right? We've got this level of support right here, right at $12,598.90. Now you can, plus or minus about $100 off of this, but this is where I'm anticipating we're going to see the end of this market correction, right? This is based off of trends in the past. There's no way to know for sure, right? But if we look at previous retracements, you can get a pretty good idea of what we've had. In fact, this retracement was a very nice one. It only retraced about 38% or so, not even. So less than 30% on this previous retracement, and that was recovering off of the COVID situation. If we look at this retracement, what do we see? I would anticipate it's about 50%. So we're just going to draw this up. 50% smack on the nose. So, I mean, if it mimics this retracement, that's what you're going to be looking at. Now, what could be causing this market retracement? What could that possibly be, right? Well, we've got a couple different things here. We've got what has been rumored to be a technology bubble, right? So a lot of tech stock companies have been they've been going to town. They've been pounding. You've got the tech companies, right? The green energy companies, the electric vehicle companies, all these things that are kind of atypical compared to your tried and true safe plays like a JP Morgan or, you know, your mortgage companies, your banks, and we're transitioning and there's this move over to money to new companies. We also have younger investors that are starting to step into this, retail investors, millennials, people my age between 18 and 30 years old. With new people comes more money, right? You've got more liquidity being pumped into the market. So I would say yes, there was a small bubble, right? Things were overvalued, and I don't think anybody's going to deny that, but the overvaluation is coming from the prospect of future, you know, I would say evaluations. So Tesla's a good example of this. If you look at Tesla, you can see that Tesla at one point, you know, was a much cheaper company. Obviously, this is a moneymaker right here. Tesla would have printed you straight $100 bills for a long time. If you bought it at $70, you were up over 1,000% on Tesla, right? And if you look at their price to earnings ratio, right, it's astronomical. It's insane. And compared to, you know, other stocks, it doesn't make sense. What you're investing in with Tesla is the potential for growth, right? Just keep that in the back of your mind. When we look at the NASDAQ, we're going to come back here to the NASDAQ and just take a quick peek at what's going on. You can see that this is an example, right? You're seeing the NASDAQ kind of reflect on these other tech companies that are just getting smoked right now. So like, let's look at Exxon. Exxon is an example. This is an innovator and a technology-based company. You look at their daily candles, they've been getting crushed. They've got this double test. Honestly, this almost mirrors the NASDAQ to a T. This is a perfect example of a stock that has been getting crushed along with these technology plays, right? Does this mean that technology plays are dead? No, I do not think so in the least bit. And I think that Kathy Wood and ARK Invest would tell you the exact same thing, which is why they invest in these companies. I think that they're taking a pullback and a correction. This is affecting the entire market as a whole, because when you see a lot of stocks start to pull back, start to correct a little bit, you get people that freak out. They step out of their plays, right? They change their momentum and just sit on liquidity instead. And, you know, there's not necessarily anything wrong with that. That's personally not what I'm doing. I'm going to keep adding to my long-term stocks, such as Microvision, such as Sensonics, AGTC, Exxon, right? Because I think they're going to be good plays for the long term. Right, so take that for what it is. That's what we're watching right now. This covered a lot of price action, almost a 3% loss on the day. A little bit less than this previous huge red candle, which was about 3.5%. But that 3.5% loss, at least in the stocks that we've covered here on the channel, equated to between 15 to 20% losses, right? It was a terrible day. And we saw that across the board with a lot of different stocks. So if we look at, Sensonics, they're still down in the after hours right now. But you look at them on the monthly chart, you can see how bad they've been bleeding because of this crazy sell-off that's been happening in the NASDAQ, right? So this is just a perfect example. Does this mean that Sensonics is dead? No. Does this mean that I'm red on Sensonics? Yes, it does, right? So that's what we're sitting on right now. And I don't personally go short on stocks. I don't do put options on stocks. I don't believe in that. I think it's riskier than going long on the market because, you know, historically speaking, stocks go long for a lot longer than they go short. So unless you really know what you're doing, which not to say that I don't, unless you really know what you're doing, there's risk involved. And I don't like the idea of devaluing a company in order to value myself, right? I don't like a transferring of liquidity from a company to me, especially if I believe in what they're doing. That doesn't make sense to me. The only reason, I'll tell you what, when we're having on IPOs, that'll be the first stock that I ever short my entire life. But I'm just not going to do it. I'm a bullish investor. I don't like shorting stocks. That's not my personal preference. I would say that I'm 70%, long-term investing and 30% swing trading. And with my long-term investments, I'm just going to keep adding to the slice of the pie. If you are worried right now, right, what can you do? If you don't want to wait out and see if we retest this 50% retracement, you can take a little bit off the top if you're profitable, right? And then when it reaches its bottom and starts to correct in a good way, we get a couple straight days of upward trajectory, you can reinvest your money, right? But the downside to that is you may mistime it, right? You might miss out on some potential gains. So there's two flips of the coin. You can do either way. I don't think one's better than the other. I think that taking a little off the top and then reinvesting it at the bottom, you're not always going to guess the bottom perfectly correct. So just keep that in the back of your mind if you do decide to do that. But that is what I'm anticipating. Now, I do think now that we have broken that ascending level of support, you are pretty likely going to see maybe a green day spread out here or there. We might have a green day tomorrow. We might have, a little bit of recovery. I would not be surprised by that in the least bit. However, right, I do think we're ultimately going to retrace down to this 50% retracement now that we have a hard break underneath this level of support at 38.2%. So that's my update here on the market. Number 2 on the list here. We're going to look at the AMC price action here today. And I know that a lot of people are getting really complacent. They're saying, Trey, was that 801 meaningless? Why are you still leading us on here? You need to make an apology video and tell everybody you're sorry you duped everybody, the whole 9 yards here, right? And my standpoint is the exact same. I think that the best thing that we can do for ourselves, my friends, is not get our expectations set on a specific day for this to moon. I know, like every single YouTuber out there that's covering this right now, Uncle Bruce, Tyler Wilson, I'm sure, myself, Max Marr, right? All these guys, and I'm finally saying your last name right, brother. I hope you're watching this. We're all getting asked that. And the true answer is nobody can tell you a day, nobody can tell you a price. Don't let anybody convince you of that, right? Just because we're talking about $8 being significant, right? That being the first box to check doesn't mean that just because we hit that $8, all of a sudden it's going to go to $100, $200, $300, right? That means it was the first box to check. We got call options to expire in the money. So they could potentially be exercised. Now, did we see that happen, right? Most people talk about they need to be exercised or bought, sometime between Monday and Wednesday. Obviously, we did not get a lot of volume today. If you look on the daily chart, look at these candles, right? What do we see? We saw really low volume, 54 million in total volume. However, this does not stress me out because if we look back here, right, what do we see? We see low volume, we see consolidation, and we see another huge leg up. To me, this is still the exact same technical setup on the chart. We've got a nasty cup and handle setup right now. We've got this huge cup, and we've got the beginning of what could be a pretty solid long handle, right? So if you look at this, that's the handle. We had a solid run up to about 1097, and now it's consolidating. It's consolidating. Keep that in the back of your mind, my friends. We do not need to stress over consolidation, especially because if you look at this on a 1 month chart, right, what are we seeing? I've got the 15 MA pulled up, which is the moving average. It's a microscopic perspective of price action. 200 EMA down here, macroscopic perspective of price action. We've got the 15 MA that is trading above the 200 EMA right now. Now, they are hooking in together, right? Which typically indicates two things. A, it could be the sign of a little bit of a slow bleed, or B, right? It could be either one or both simultaneously, a decreasement in volatility. Typically, when you have these two indicators hooking in towards each other, whether the 15 MA is above or below that 200 EMA, that means you're going to see a little less price action until they hook away. Once they start hooking away, that could be a prediction of upcoming hard movement, right? So I'm not stressed about this in the least bit. We are on a little bit of a downtrend right now, a slight one, right? It's very, very slight, nothing that's concerning me in the least bit. But we are in a little bit of a downtrend, and what it's going to take is for that volume to come back up. Now, what are we looking at that could be a concern? Well, we had this gap up in price action. I mentioned this in one of my previous videos, right? We've got this unfilled price action when we gapped up in the pre-market back on what would have been March 1st. So it's possible now that they've broken this level of support that we retrace down to 832. It's possible. Is there a huge difference between 848 and 832? Not really. Personally, what I'm going to do if that happens is just keep adding my position, which you can see here I've been doing anyways. I've got 1,580 shares at a dollar cost average of 852. I'll just dollar cost average down, right? So that's my personal game plan. That's what I plan on doing. So take that for what it is. There are other good things that are pointing in a solid direction here, and I've seen a lot of talk about the quadruple witching. Now, what does this refer to, right? We've got 19 March, which has a crap ton of call options. Look at all these. And don't take this as a date that everything's going to start rocketing, right? Do not assume that. This is not what I'm saying. But what is interesting is that we've got a lot of call options here. We've got call options between $2 all the way up to $15. I would say even $20 that are unusual options trading, right? This is not happening from retail investors primarily. And I'll tell you why I know this, right? Quadruple witching has been something that just started getting mentioned on Reddit. Now, think about this logically speaking. If this just started getting talked about on Reddit, do you really think that there are people out there, retail investors, people like you and me, who were looking at this and saying, you know what, I'm just gonna buy all these option contracts for the 19th of March because I know it's a quadruple witching date, and I'm not gonna tell anybody, even though I know that there's this huge movement going on, and I'd want other people to know about it as well. That's not the case. These are institutional investors. They're the toots, baby. The toots know what's happening here. This is an event that happens about 4 times a year, and you also have FTDs, failure to delivers. Now, what does this refer to? Essentially, what you have is a loophole in the market making system. So let's say that you've got Tendy over here, right? Tendy says, hey man, he's talking to Hedgie. He says, hey man, I'd like to purchase 100 shares of AMC, and he pays for the whatever that dollar cost is, the market value, right? So the market maker over here, the clearinghouses, they say, yeah man, we got you. But in reality, they don't send him real shares. They send him IOUs. They send him shares that are going to be replaced with actual shares down the road. But Tendy over here, he doesn't realize that these aren't real shares. They just show up in his account. He just sees that they're actual shares. And what happens is that IOU needs to get filled at some point, and the clearinghouse doesn't do it. Tendy over here keeps buying these shares. He keeps buying, sends in the liquidity, right? The clearinghouse gets the liquidity, and They may have the shares, they might not have the shares, right? It could be a little bit of both. However, we do know that it's possible, and there are loopholes for them to push out these IOU shares, and they haven't been paid back, right? These shares that they're supposed to send out, maybe they don't have the collateral for. Maybe they just haven't sent them out for who knows what reasons. Manipulation, you have it, right? We know that manipulation happens. I tell you what, you search up Jim Cramer manipulation on YouTube, and you'll have your mind blown. That's all that I got to say. He talks about it straight up because he's lived that life. But anyways, these failure to delivers need to be accounted for. And when the day comes, when these need to be accounted for, these guys are going to get screwed if they don't come up with the collateral and shares, and in a good way. So how does this affect things? When you create these IOUs, it shifts the supply and demand. Essentially, what you're doing is creating counterfeit shares that don't exist. Let's say that Tendy over here, he bought 5,000 shares of AMC, and none of them, and of course, this is just a hypothetical, maybe half of them are legitimate shares, half of them are IOUs. What this does is you have 2,500 shares that aren't supposed to exist in the market, and then the clearinghouse over here, either A, has 2,500 shares that he's supposed to give to Tendy, or B, he doesn't have these, right? And he's missing the collateral. Either way, the supply is increased, which creates this false selling pressure and pushes down that demand. You can think about it like this, right? So if we've got two lines, you've got a supply line like this, and you've got a demand line like this. And I saw this from a different video. So take this for what it is. So we'll call this supply, we'll call this demand, right? So you have this shift, right? You create all these fake shares. We're going to call this supply. What you're doing is you're increasing the supply. It's moving to the right. Now, what happens when you keep increasing the supply, right? To meet that same divergence, right? For whatever the amount of shares are, let's just say that this is, 1,000. That's where the divergence meets on that demand. The demand increases or decreases as it was, as long as you keep moving that shift in supply. Supply keeps increasing, demand goes down. Supply goes down, demand goes up, right? That's the law of basic economics, supply and demand. That's critical. That's huge. And these FTDs, these failure to delivers, is essentially adding to the issue. It could be a multiple of things. It could be naked shorting. It could be these counterfeit shares. It could be call options expiring in the money, and they don't have the collateral for this, so they create these counterfeit shares to meet the supply and demand, right? It could be an ample amount of things. It could even just be hedging. It could be delta hedging. It could be these hedge funds that are creating shares essentially that don't exist so they can meet their own collateral issues, right? It could be a bountiful amount of things. And I believe this is happening for a couple reasons, right? So I'm going to pull up my browser here, and I'm going to show you AMC on Market Watch. Check this out. We're looking at the total overall shares outstanding. Now, there's a bunch of different kinds of shares out there, right? But we have, out of the shares outstanding, 377 million total shares. Public float, 374 million. About the same, right? So most of the shares outstanding are available to the public to trade. 374 million total public float shares available, right? Well, let's look at the daily charts. There have been days where we've seen the shares exchange hands more often than actual shares exist in the market. We've got 434 million shares here. We've got, what would be 391 million shares here. 1.2 billion shares traded hands on this day, January 27th, right? So take that for what it is. It tells you the entire freaking story, guys. I don't believe it. I do not believe that the entire shares outstanding exchange hands 3 times in a single day. I will not believe that for a second. This, to me, tells you the entire story. There's shares out there because of these FTDs, these failure to delivers, right? These IOUs that are being written out by the clearinghouses that are causing fake selling pressure in the market. You see this kind of thing happen. It's happening with GameStop too. GameStop's getting that same stuff. And GameStop has an overall lower float. They've got less shares available to the market, which is why some people believe that GameStop has the only potential to squeeze in that AMC doesn't. I don't believe that. I don't agree with that. I think what it comes down to is supply and demand, right? You could have 1 billion shares available to the market, right? But if every single one of those shares are being held, then the game is still the same. The laws of supply and demand stay the exact freaking same. So take that for what it is. However, I do want to point that out because I see a lot of questions about FTD, failure to deliver, right? What does it mean? Why is this important? That's why it's important, right? Because they're going to have to be held accountable eventually. They can't keep playing that game. You're going to have big forces step into this eventually and say, hey, we need those shares now. You can't keep playing these IOUs. Where are they? Where are they, right? And if they don't have them, that is going to shift a crazy, crazy amount of demand back into the market, right? It's going to clear up a lot of these fake shares that are likely floating. Who can prove this? Nobody can prove this, right? But based off of logical induction, right? You can just induce this with your own brain. Think about how possible it is for 1.2 billion shares to trade hands on January 27th. Do you really think that's the case? Do you? I know there's a lot of retail investors out there. Let's just assume that 200 million shares of that were retail investors that stepped in, made money, got out, or stepped in, lost money, got out, right? I can believe that. I can believe that. I can believe that 200 million shares would have traded hands that day. But 1.2 billion. Think about the significance of that. I don't buy it. I don't buy it at all. And that's very important to consider. So that was a long rant. I did want to point out a couple different things because I've been asked a lot of questions on that. In regards to the quadruple witching, what does this mean? Well, we're just going to pull this up for you really quick. What does it mean? I don't want you to get that hard date stuck in your head. It refers to a date in which derivatives of stock index futures, stock index options, stock options, and single stock futures expire simultaneously, right? So this gives an opportunity for a huge influx in capital and equity to pump into the market. And I think this is why you're seeing some institutions that are pumping a large amount of shares into this date, the 19th of March, right? That's why you've got such unusual options trading way out ahead of time. And people just started talking about this a couple days ago, right? So I do not believe this is retail investors. I don't think this is retail investors that are doing this. I do think it's the toots that is important to recognize, right? And that could be a day in which you see things happen. Don't set your expectations though, right? I want you to walk away with a lesson here. The sooner that we can just take this day by day and stay true to our convictions, right? And not expect this to immediately moon, the sooner you're going to be able to accept that it's okay to consolidate. It's okay that we dropped 0.5% today. It's okay that we only went up 3% today, right? How come this didn't moon right after that 801, right? Because that was box one. We checked box one. We got options to expire in the money so that we could potentially have shares that are going to be purchased back at those strike prices to help push up the stock market value, right? So take this for what it is. Take it one day at a time. Stay convicted to your stocks. I truly do mean that. I've mentioned this in one of my previous videos, but Microvision, right? If I had sold Microvision, my girl, MVIS, Mavis, back when it was trading at $4 freaking bucks, back here, right? There was a long period of consolidation for this stock. So I'm going to back it up. Check this out. First time that I bought into Microvision would have been when it was about $7.50. You know, I mistimed the bottom. I was wrong. And it kept bleeding all the way down to $4.75. Well, if I had sold out back then, instead of doubling down and dollar cost averaging down to about $6.70, I would have never experienced this run up to 24 bucks. I would have never been up, you know, almost 400%. It wouldn't have happened, right? So the same conviction, you need to have that same conviction based on the DD that we've done, all the numbers we've crunched, all the different, the potential for growth, the Amazon acquisition, all these different short interest numbers, the short borrow fee rate, the utilization, whatever it may be. Stay true to those numbers. I stand by that 100%, and I always will. I want to point out two things here, and then we're going to move on to Rocket, right? So I've got this all labeled out. If you want to skip ahead, feel free to do so. But I'm going to point out the AMC short interest on Fintel. And we're looking at a couple different things. So check this out. We've got the total short volume as of today was 14% of the market volume. So we had 7.7 million total short volume, 53.9 million in total market volume. That made up 14%. And we did not trigger the SSR today. We did not drop 10% below the previous day's close. So SSR will not be in place tomorrow. What do we have in terms of short share availability? 150,000 updated as of 10 hours ago. This has not been updated for a while. So we're going to go over here to iBorrowDesk and shout out to, well, one of my friends over the Discord. I'm blanking right now. I apologize. There's a lot of people over there. But he pointed this out to me, and it gives you regular updates in terms of short borrowing. And the number stayed the same, 150,000, right? That number has not changed. But what has changed is the fee percentage. It went up to 9%. And I've been reading in a couple different places, and I think this is pretty likely. It's related to the cost to borrow and the days to cover. So the days to cover, what does this mean? Short interest divided by the 3-month average volume. One thing that you're going to notice is that this days to cover number is starting to go up. That's starting to go up, right? That means it is going to be more difficult for shorts to cover their positions profitably, right? And as that number continues to go up, you're going to see that the cost to borrow also continues to go up because, you know, these clearinghouses are saying, hey, we recognize that if you take a short position right now, the odds of you coming out profitable, which means the odds of us coming out profitable, are pretty low. You might not get your money back to us. We might have to make a margin call. So we're going to raise that cost to borrow to give a little incentive not to short this stock, right? Because we think it's kind of a bad idea. And as that cost to borrow continues to go up, that tells you, hey, this is we're getting into bullish territory. There's a good chance that we can make this happen. So a lot of good things happening here. 96% utilization, very, very high utilization, low short shares availability. It's been bouncing around a couple different numbers here for a while. If we come back to iBorrowDesk, like I said, shout out to that guy over the Discord for pointing this out to me, but it's been bouncing around, you know, a couple 100,000 for quite a while now. I mean, it went up to about 1.2 million at one point, but below that, at one point it's down to 400, 100. I mean, you guys get the point here. The shorts are still hammering this thing. They're still double dipping in the pond. They're not giving it up. And that tells you the entire story and everything you need to know about what's going on with AMC right now. It's not a dead cat. I will take all the heat in the world for AMC until the day that I die. I do not care. I don't care because I'm not giving up on this. There's absolutely, I'll tell you what, I'm not stupid. I'm not stupid. The day that this is dead, the day that the numbers are bad, right? The day that all the shorts have covered, all the utilization is gone, the media stopped covering this, I will have been wrong at that point. But this price action right now is psychological. I 100% promise you guys, I promise you, stay true, stay convicted, stay the course. You will be paid. I promise you. Is this going to do what GameStop did? You know, it has been following that similar trend for quite a while now. Is it going to go as big as GameStop did? Nobody can answer that. So don't let people tell you that. I do think it is going to go high, though. I do 100% believe it's going to go high. I think it's going to have a gamma squeeze. I think it is going to have a short squeeze. When is that day going to come? I don't know. Nobody knows. Nobody can tell you that, right? So that's what I've got for you. That's what I've got for you on this stock. Last thing, and this is probably why I saved it for last, is because I was not excited to talk about it, was RKT, Rocket. What the heck happened today? Why did I make a video on this? Why did I lose people money? Right, the whole 9 yards. And I'm going to show you one thing first and foremost. I saw this thing bleed before my eyes. In fact, I had a stop loss set and I took it off because I recognized that there are people out there that likely bought this simply because I put a video out on it, and I'm going to sit here and suffer with you. Maybe you don't think that's a big deal that I'm down $2,400. Take it for what it is. I'm down 24% on RKT right now, but I'm always going to be transparent with you guys, and I made a terrible mistiming on that. Do I take back what I've said about the numbers? Absolutely not. Not in the least bit. What do I take something back? Yes, I do apologize for the timing. This is not something that I typically do, right? I don't like chasing plays. And actually, in my video this morning, I said the same exact thing. I said, I typically don't chase plays, but based on the numbers that I see right now, I think this is a good opportunity, and I'm going to be buying in, at the price that I did, which was $38. I took an opportunity to average down and still mistimed it, right? So I was wrong. I was 100% wrong. And you could take that for what it is. If you're a bag holder, man, you know what? I'm with you. I'm also a bag holder. But does this mean that it's dead? No, not in the least bit. I've seen people comment that Citadel literally owns this, but if you wanted to solely base, I don't like Citadel either. But does this mean that I'm not going to invest in a company just because Citadel owns it, right? No, and I shouldn't say invest, trade, right? So based off of the trading potential, what do we have here? I stand by the exact same things that I'd mentioned. There's crazy indicators and numbers saying that there is a chance for this to squeeze. 97.31% utilization. It's actually got a higher utilization than AMC does right now, higher than GameStop does right now. Cost to borrow, 51.53% annually. That's an insanely high cost to borrow rate. Anything over 10% is nuts. So 51.53 is insanely nuts. The days to cover, 4.46. That's insanely high as well. I went down a little bit. It was at 6 this morning from when I made my video. But anything over 1 is significant. That means that it is difficult for shorts to cover their positions. So take that for what it is. That is a big deal. I stand by it 100%. Now check this out as well. RKT, when I made that video this morning, it had 0 short shares available. And I understand that now it does not, right? So we're going to update you and just let you know what the numbers look like in case you still hold a position, in case you're a bag holder, in case you sat on the sidelines waiting for this to happen, knowing that I was an idiot and made the wrong call, right? Still an insanely low short share availability. 60,000 total shares updated as of 1 hour ago. Cost to borrow, still 58%. Insanely high. I'm gonna be completely blunt with you. I am bullish as bullish gets on AMC. I truly do believe it is going to squeeze. But if you ask me right now, which one's going to squeeze first, Rocket or AMC? I think it's Rocket. I don't even think the Rocket squeezed. I don't think it did. I think there's this pure hype and drive. I think there's this pure buyers stepping into the stock and literally just riding the crap out of this thing. You know what I think happened? You had the shorts, right? The institutions or whoever was shorting the stock that literally just sat there and watched. You know what they were thinking? They were thinking, this is a pump and dump, which it did end up doing, 100%, right? We can see that. We can see that it pumped and it dumped. That's a picture-perfect pump and dump. Sometimes people tell me, Trey, AMC is a picture-perfect pump and dump, but you must not know what a pump and dump looks like because this is a pump and dump, literally to a T. They were thinking to themselves, hey, this is going to be a pump and dump. People are going to ride this up. Next day, they're all going to sell out. And we're just going to keep riding our short positions and come out net neutral or even ahead because everyone's going to get rid of their shares. That's what happened right here. 60,000 of them covered. We've got 60,000 total short shares available as of now. However, the fact still remains that there's 97.31% utilization on the current lendable short shares. So not even close to all of them have covered. There's still an insanely high amount of total short shares that are being held by institutions or retail investors, whoever it may be, right? So we know that. So I do apologize. I do apologize for putting the video out when it was that high. I apologize for not giving better guidance on when to buy into this. But if we look at where it's bottomed out here, right? At about $27.82. Let's just take a peek at what that retracement would look like. That would be almost a 78.6% retracement. You usually look for a 50% retracement. So that was the worst case scenario here. That was the worst case scenario, was a 78.6% retracement. Does that mean that I couldn't have done a better job? Absolutely not. I should have done a better job. In fact, I'm infuriated with myself that I broke my rule. That's one of my rules. I don't chase plays. I hate putting out videos on the channel that I genuinely think have already run up too far. That's why I put out my video on LMFA, or I think that was the name of the stock. LMFA, right? Yeah, LM Funding. Same thing happened with LM Funding way back in the day. So I don't know how long ago this was, but it was somewhere, it was here. Ran up to $4.49, all the way up from 73.7 cents. I made a point to put out a video because I was asked by so many people saying, Trey, should I buy this stock? What's a good entry point? And I literally put out a video and I said, don't buy this. It's a pump and dump. It's literally going to dump so hard, like don't touch it, right? And people were good. And I didn't do the same thing with Rocket. I didn't. I scalped the stock yesterday. I made some pretty good money, and I thought that it had more opportunity to run today. But this does not mean, and I don't take back my DD on this, right? The_short_squeeze_2020 on Reddit threw together some amazing DD on this, and I think it's factual. I think it has relevant information in it. I think it's actually got great long-term potential as well as short-term potential. The only thing that I regret about this is the entry point. I completely did not hit that entry point at all. And honestly, guys, I'm a little bit bummed because I feel like I've been on a bit of a cold streak. I feel like I've made some bad calls on swings lately, and it's discouraging. It's discouraging for sure. I read the comments. I read all your guys' comments, as many of them as I can at the very least. Sometimes I honestly stop. So I just stop because on the videos that I don't nail, that I get wrong, I just feel like the biggest loser on the planet. And I take a lot of pride in the channel. I take a lot of pride in helping people, bringing true value to people's lives, and being able to change a financial situation, because the fact of the matter being, I changed mine a lot. I turned $8,000 into $46,000 in 2 months, over even a month and a half, I should say, back when I started the channel to about the beginning of January. And here we are now. The game changed. I've hit a couple of bad calls, and granted, we are in a little bearish of a market, so I'll give myself a little bit of slack, right? We were having a correction, but that just means, what I've mentioned before, we need to be more choosy about the swing plays that we make. So this is me making a formal, reach out and saying, if you're a bag holder, I'm with you. I feel you. I am a bag holder as well. I'm down on Rocket almost 24%. I took off that stop loss because I recognize that I screwed people out of their money. And maybe that means nothing to you. Maybe it means something to you. It means something to me. And I take a lot of pride in my channel. I take a lot of pride in helping people and bringing together a community. So what I'm asking of you guys is to understand where I'm coming from. I think that's the thing that I found the most difficult with YouTube, not to go on a rant, but the thing that I found the most difficult with YouTube is I've found that before I started, I didn't tie my intrinsic value as a human being to solely performance. I was a very, very competitive runner. I spent a lot of time, literally I ran 100 to 120 miles a week for a long time. I can show you my Strava if you want. Some people probably wouldn't believe me, but if you do want to check that out, I have a Strava where I talk about, all the miles that I put in. And I would literally run, 100 miles a week for who knows how long. So I'm not gonna log in right now, but you can check it out if you want. It's just Tremaine Collins, TREMAYNE. I use Trey because it's just easier to say. But anyways, I ran 100 miles a week, 120 miles a week, and it was a blast. And I didn't tie my intrinsic value to that. I didn't tie my intrinsic value to how fast I ran every single day. I just enjoyed the process. And this transition that I made over to YouTube, I find these crazy periods of insane dopamine rushes where it feels like I'm just riding the top of the world, like standing on top of Pikes Peak in Colorado, just rushing on adrenaline, pumped like you would not believe. And then these super long valleys where you've got people against you, where you've got people looking for blood, that they want to literally burn you to the ground because you made some bad calls. And like differentiating that and being able to take a step back and realize that as a person, I'm not worth just my success rate. It's been hard. And I recognize that on YouTube, what I'm doing with finance especially, my worth as a channel does derive from making plays. That's where it comes from. So I recognize that, in a bearish market, I'll take that for what it is, but I need to make some better calls. And I'm going to take a real step back and see what I got to do to make that happen. I think that RKT still has potential, but I made a wrong guess. A wrong educated guess. I thought it would have kept moving, and it didn't. And that's on me. So take that for what it is. I don't think that means it doesn't have potential to run. I think that we had a crazy pullback in the market today. The NASDAQ was down almost 3%. You had a lot of plays that pulled back and bled an insane amount, which is why I think AMC holding up so well speaks a lot for what could come. But nonetheless, That's what I've got for you guys. That's my apology for that. And if I've learned anything with this whole game, the last month with AMC, with WSB, the meme stocks, it's probably two things. One, I got to trust my DD, my technical analysis, way more than I give myself credit for, because when I just take a step back and I don't pay attention to all that BS going on Reddit, usually I make some pretty good freaking calls. I called JagX, BNGO, and Nuve, a plethora of plays, and you can check out a video I've got out on there where we've hit home runs on a bunch of stocks based on just my own research. And, I find that when I'm lured into these plays by Wall Street Bets or Reddit or whatever it may be, even if it's good DD, right? These super hype plays, I don't like doing that. I don't like those plays. I like the plays that don't have hype. I like finding those diamonds in the rough that nobody's talking about. And then once you're already in them and they get that attention, maybe you gotta wait a couple of days, but they run, right? So that's one thing that I've learned. I gotta trust myself more. Second thing that I've learned is who's in my corner, right? Because it's really easy for people to be bandwagoners. And I'm just going to come out straight and say it because I know it exists. It's easy for people to be bandwagoners, right? To ride the train when things are going green. When there's valleys, when you're riding through the troughs, man, you're just getting pissed on. It's not going good. You're going to have people turn on you. And it made me really, really respect and appreciate the people in my corner. So everybody out there that has been rocking with the channel, who has supported me, whether or not we've been green, whether or not we've been red, I want you all to know, Gorilla Gang, that I appreciate you immensely. And I didn't mean to make this video so long, but I had a lot to talk about. It was a rocketeer of a day. Not to make a pun, not to make a pun out of bad taste, but it was a rocket of a day. It was a crazy day for sure. I got a lot of mixed messages from a lot of people, and I understand. But nonetheless, that is what I have in the video today, guys. If you enjoyed it, please drop a like. It really does help support the channel. And consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate in the description box down below for Webull. This is version 4 for the desktop. Great platform that allows you to start trading at 4 a.m. in the pre-market. If you use my link, you get 2 free stocks with a $100 deposit. I'll receive a free stock. Great to support the channel. And if you're not interested, that is totally fine, my friends. I just appreciate your support by taking the time to watch my videos. I also have links to the Discord if you want to check that out. You can link yourself up to the Patreon. It's $5 a month if you want to do that. If not, that's cool. And there is a link to the merch store if you want to buy yourself a Gorilla Gang mug or a t-shirt. That is also available to you as well. That is what I have for you guys today. Thank you for watching, my friends, and I'll see you all next time. Peace.